Okay, guys, so in today's videos, we're going to have a look at Bitcoin, which has shot up today by around 10% because Tesla has just announced it invested $1.5 billion into Bitcoin, and it's planning to accept Bitcoin payments for their vehicles. That's obviously a big step towards Bitcoin being widely accepted as a means of payment. And we understand what really drove Bitcoin's rally since March of 2020 last year when the Federal Reserve slashed interest rates in the United States. So we saw here that the Fed cut interest rates in March from 1.75% down to 0.25%. And Bitcoin from March shot up because of this risk that interest rates can no longer protect investors from inflation. So when we say interest rates, what do we mean? We mean government bonds. So if you look on this spreadsheet, you have the 10-year government bond, which is basically just a security that the government sells to borrow money from investors, and they promise to repay an investor their money back plus some interest every year. And obviously investors buy a government bond to try to protect themselves from the rate of inflation. So let's say inflation is running at 2% per year. What investors are going to be doing is they're going to be hoping that the interest rate from the government bond is higher than the 2% inflation rate. And let's say the interest rate on the government bond is 4%, then your money's making 2% per year over inflation. So the purchasing power of your dollars is protected from inflation. However, obviously, because of the coronavirus pandemic, the Fed slashed interest rates to zero, as we've seen. And that's when Bitcoin, as of March of this year, shot up aggressively as interest rates went lower. Because here, on the right-hand side, we have the 10-year bond minus 2% inflation. And what you can see is you've got a minus number, which is showing you how much your dollar is losing its purchasing power every single year to inflation over the current rate, over the interest rate. So clearly investors don't want to be holding government bonds. They have to buy something else to hedge their risk against inflation. And that is a fundamental reason why Bitcoin has now attracted institutional money, where in 2017, the rally was really in retail investors, but this time it's institutional money like hedge funds, investment banks are all buying Bitcoin because they're saying it's now being seen as as a hedge against inflation risks, similar to gold. And that's why gold and Bitcoin together shot up in March of last year. Same situation if you look at gold. It was around March of last year that gold really picked up after the Fed cut interest rates. So again, here you can see clearly around March times is when the gold price really shot up. I remember that the interest rate got cut on the 15th of March. And then here you see around the 15th is when gold shot up. And if you look at Bitcoin, it's the same situation. So we have to remember now the US government trying to pass a stimulus package of $1.9 trillion. This is expected to really pick up the risk of inflation even further. And this is why Bitcoin and gold are being seen as the two preferable risks or assets, you can hedge against the risk of inflation, as well as stocks, obviously. So fundamentally, really bullish at the moment. We've seen a big spike higher today because of the Tesla news. My members are already in a good profit from earlier on when we jumped in on a pullback price. So again, we're going to hold this and hopefully ride this trend out in the markets. Remember, they're saying Bitcoin can go up to $100,000 a coin. It's now at $43,000. So a long way to go. And we can continuously try to trade this on the way up. So if you want to trade this with me alongside my team, remember you can send me a message, join my trading team. But this is the fundamentals why Bitcoin's higher in today's market. So hope that makes sense. Thank you for watching.